Greetings, members, one and all of the Salivation Nation. I believe it's time that we are honest with ourselves. Gold and Bitcoin are losers. Let's explore. That may seem quite unusual for a channel that focuses on precious metals to say that gold is a loser, or that any alternative investment to protect against the devaluation of this Federal Reserve note here. This note is a debt instrument, and by design, it is losing every single year. In fact, now the pace of its loss is hastening. It is up, but it is still outperforming in many ways gold and Bitcoin, at least if we measure it over the course of a month. That's right, the dollar is losing at a pace of 1% of devaluation per month. But let's take a look at that month and see how much gold has lost and how much Bitcoin has lost. And then we're going to take a look at the wide-angled view of all three asset classes or currencies, or even if you consider them money. All three may be considered money by some standards. But let's talk about their value as well as the price. Price is denoted in the currencies that we use day-to-day transactions. I'm holding in my hand here the dollar, which is the top reserve currency. And this dollar is losing at a rate of 1% per every 30 days or per month. And that is the period that we're going to be talking about here. If we look at a chart as we record this video, Bitcoin has taken quite a big hit over the past 30 days. It is down over the last month of over 20%. Over 20% drop Bitcoin did over the last 30 days. If you take that measurement period, Bitcoin is definitely a loser. If we look at the price of gold over the last 30 days, it has fallen almost 2%. To be specific, as I record this video, it's down 1.85%. So far, against the dollar, which loses 1% every 30 days, both of these assets, Bitcoin and gold, have lost against the dollar. And that's kind of sad. And so what is that telling us? There's a couple different things that's telling us when we take a look at the bigger picture here. It really comes into perspective. But if you measure it against the 30-day period, you should get out of all of these. Gold and Bitcoin, just toss them. And you know what? You should stick with the thing that's going to fail the least. The dollar. That's right. Hang on to your dollar. And by the way, silver is kind of in between both of those. Silver has fallen at a rate of about 6.4% over the past 30 days. So we need to get rid of silver as well. Hang on to the dollar. What else do we have in terms of monetary assets or currencies like assets? That's the best that's out there, right? Well, that's a perspective one can take. The lesson here is that if you take any two dates, and by the way, this is today and 30 days ago, the measurement between those, you draw a string between them and look at the graph, and you can see that gold has lost almost 1.8 or almost 2% during that period. And then Bitcoin, today and 30 days ago, you draw that string, and it has lost over 20%. You can pretty much make anything say what you want to say or perform how you want it to perform. All you need is two dates. All you need is 2 dates to be able to make an asset look really good, or to make an asset or stock or whatever investment vehicle you're talking about, and make it look really bad. Either one Either or can happen very, very quickly when you're talking about the markets. And that is the point of this video. In reality, when you take a look at it over the course of a long period of time, we know that gold is the most stable of all these asset classes out there. Stocks, bonds, things that I've not talked about here. It has lasted for thousands of years. And that is something that we cannot be taken away. And Bitcoin, as an investment vehicle, especially when you look at a chart going back to 2011. In fact, I think there was a time where Bitcoin basically almost crashed down to almost nothing. Well, it has been the best investment in a long time against many other classes out there. Investment vehicles. Bitcoin has done very, very well. Gold has performed very well against other asset classes, but mainly as a wealth preservation tool. And that's the thing about gold that I think is quite fascinating, how it stood the test of time. Its track record is unparalleled by anything out there in terms of its ability to preserve your wealth over the course of a long period of time. And that's really what it's about. So you can take any 30 days or any period of time and you can make gold look really, really good. It's a matter of what 2 dates you choose. But you can also make it look really, really bad depending on which 2 dates you choose. One thing you can't do about the dollar, because by its very design, it's manipulated by the Federal Reserve openly for the most part. And that's what the FOMC is about, Federal Open Market Committee. Well, this thing here is devalued by about 2%, 2 to 2.5%, was their latest target that they were comfortable with before inflation started creeping in. And now some fear it could run away from us. But this debt instrument here is designed to lose more and more each year. It's on a steady decline. No matter how you look at it, no matter which 2 dates you choose, the dollar is losing value. Now, the strength of the dollar is another thing, but that's a different measure. That's a different tool. That's people's faith in the dollar compared to a breadbasket of other currencies tracked by the International Monetary Fund. It's a very different thing, but the dollar itself is something that is designed to draw down, to devalue. Gold is designed, well, it's not designed at all. It just is. The very mere fact of its existence means that it is something that is trusted because of its inertness, because it pays no dividends, because it doesn't react. Not only does it react physically, but it doesn't really react other than its price point, which man has their fingers on. It's essentially with the markets and the liquidity and the movement in prices and the like, and how much it's sold and bought, and futures and options and trading on it, the paper markets in terms of its price movement. But its value is constant and cannot be manipulated in any way, shape, or form. And we're talking broad manipulation in terms of price action on a day-to-day. But nonetheless, gold is something that I think is quite special in that regard. The other lesson here is when we talk about Bitcoin. Bitcoin is something that some people think that I'm against, but I'm not against Bitcoin at all. Some people feel it's a threat to the bullion markets, to silver and gold, but I don't see it as a threat because it's very different. It's a very different thing. It's a highly speculative asset class, and it's a digital asset that is whose value is derived solely on the speculative nature of what it is. In other words, people's faith in its ability to rise and rise further or fall. When people lose faith in it, it will go to zero completely. If enough people lose faith in it, it's like people, running. It's like I don't know how you would compare it to something. There's a danger coming, and people want to get out of a certain house. where there was, let's say there's a big party happening at your house and somebody smells smoke. Well, maybe 2 or 3 people realize, this is not good. This smoke is getting bigger, and it's more intrusive to us. And I don't know, there could be a fire there. And then so those 2 people leave, and the other people stay in because maybe they smell it faintly, but nothing much going on there. And then there's a little fire that's noticed by a 3rd person, and they tell 5 other people, and then they split. Then it becomes full-blown panic, and they're out of there. That once valued space where the party is going on, and they're all gone. That's kind of how Bitcoin is. It's like there's a big house party until the house is in danger for whatever reason. And with gold, you can't burn down gold. Bitcoin is essentially backed by the energy it takes to produce the coins, and of course I know there's a limited amount of them, but it's speculative, highly speculative, and very volatile. Look at what happened over the past 30 days. It's lost 20% of its value. 20% is huge. So which would you rather lose in terms of its price? And that's just it. With Bitcoin, its value is wholly determined by its price. With gold, its value, in a sense, is independent of its price. In a sense, there is some connection, obviously, when you go to buy and when you go to sell. And in fact, its value may be wholly dependent on the price if you need to sell it or want to sell it at that given point in time. But in reality, gold transcends price because it is seen, it's a limited asset class, been recognized for thousands of years as such, and it stood the test of time. There's no question about that with gold, and it's much less volatile than the dollar, and much less volatile than a Bitcoin in terms of its price to value ratio, if there is even such a thing. Regardless, gold and Bitcoin were both losers over the past month, but of all 3 asset classes or currencies or what have you, however you want to label them, one thing is for sure, the gold is the clear winner between these 3 in terms of its long-standing test of time and value. It has survived empires, epochs, generation, cultures, political factions, political parties, wars, fame, depression. It has survived it all. The Federal Reserve note, as we know it here, has only been in existence since 1913. Bitcoin has only been in existence since 2009. You tell me which one has the best track record. And when you think about those 2 dates that I mentioned, that's one thing I preach against, and that is it's just picking 2 dates. Well, gold has been done horribly over the last month. Well, it's down 2%. That's not too shabby compared to other things out there like Bitcoin. And also, when you take into account the times where you can say, well, gold has done very, very well. The key is to look at it from a bigger picture. And that is the key with gold. It's about being patient. And by the way, those who invest in Bitcoin are learning a little bit about that patience and the volatility of the Bitcoin market and the crypto market in general. There's going to be volatility, and you've got to hang in there and see where it rides out. It's an unknown entity with Bitcoin, but it has done very well over its course, especially over the past 5-6 years. But nonetheless, if you want the safest hedge, the safest protection, well, gold is it. In fact, it's so safe, it shouldn't be considered an investment. It should not be considered an investment. It should be considered a hedge. Liken it to an insurance policy. An insurance policy where you pay the premiums for the physical, but you have it in your possession for the time that you need it, if you have to liquidate at any point in time. So there you have it. Let me know what your thoughts are in the comment section below. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.